Should we have a look at some markets, Mickey? Oh, no, we're not looking at markets, are we?
Oil price. Oil price first.
I was getting too excited.
Don't jump.
Oil price, yes. Unlike the oil price. They've been falling again, hitting 7-month lows this week. So that means global price is down 20% since January. So that's a little over $45 a barrel. The world's big oil producers have been cutting production, which usually pushes prices up. So what's going on here? Shouldn't they have? What should have happened, Mickey? Do you know?
Well, I mean, if you cut production, you're squeezing the price up, but it hasn't worked, basically.
No. James Spencer's with us, former chairman of the Association of UK Oil Independents, spent 9 years at BP, now managing director of Portland Fuel, an oil trading company. James, good morning.
Good morning, guys.
So what is going on there?
Well, I suppose it's been the dominant headline for the last 4 or 5 years, and what's going on is shale oil.
And, well, that's what Mickey said earlier. Is that really it? Has it had a bigger impact than people ever thought it would?
Well, that is for sure, and that would be the narrative for the last 5 years. But, so what we had starting in 2012, shale oil massively ramped up, huge increases in production, to the point where at the back end of 2014, there was a big supply glut, so there's too much product coming onto the market to meet demand. Prices crashed. That kind of continued through to the low point of January 2016, when the price hit that $25 a barrel mark, a price which a lot of people said, would never happen again. And at that point, though, the shale production started to ease up. Either the shale oil producers started to go bust, or if they could, they totally reined in production. So prices started to creep up throughout 2016 into 2017, and they hit the kind of high 50 mark. But all that happened was that as the price goes back up, the shale oil guys came back into the market. And really, that's all we've seen is this kind of balancing of the market dominated by shale oil. As the price goes up, they come back in the market. There's a supply glut and the price comes back down.
So this is what markets are all about. This is basics at supply and demand. There's been forecasts on this program by oil experts in the past, 6 months, 9 months, saying that the oil price could get up to $75 a barrel by the end of this year. Does that now look a bit optimistic to you?
Well, I would say so. I mean, we said that potentially about $60 a barrel, so probably where most forecasters got it wrong, including ourselves to an extent, was just how quickly the shale oil guys would come back in. There was a general view that the production would kind of take a bit of time to ramp up as the price crept up with it. But in fact, really, all we've seen is that they've come straight back in once it started hitting kind of $50 a barrel. And there's always a bit of a time lag, but the number of rigs in the US has increased every single week of this year. This is a measure that a lot of people in the oil industry look at. It's the number of operating rigs in the US, and it's gone up from 630 to 740 in the 6 months. Doesn't sound massive. That's still a 20% increase. So these guys are piling back in, and it's to a certain extent, not only is it pushing prices down, but it really is beginning to suggest that OPEC's general moves, they're a bit of a busted flush, OPEC, because they're failing to control the market, which is what they want to do.
So the big question, how low can the oil price go for those shale producers to still be happy with an oil price?
Well, I don't think they're happy now. I mean, I think that's the point. I don't actually think that anybody's happy. I mean, remember the shale oil guys, when they first came into the market in between 2012 and 2014, the oil price was about $100 a barrel. They were doing very well, thank you very much. I think the point is it's hundreds of small, what they call in America, mom and pop businesses. So there's no real kind of controlling entity there in the same way that OPEC is made up of 12 or 13 members who, kind of are relatively collective in their activities. So I don't think the shale oil guys are happy. They've proved that they can kind of see out long, prolonged periods are at below $50 a barrel. But, to a certain extent, I don't think it will drop back to the $25 a barrel level, simply because what we've seen before, they'll either go bust or they'll stop producing.
James, thank you very much for that. James Spencer there from Portland Fuel. Interesting one, Mickey. Who knows where that might end?
Well, that's right. And, it's interesting to say that OPEC is a busted flush. Perhaps they've been that way for some time.